For many people, coming up with a down payment is probably the hardest aspect when it comes to buying your first home. With the average home costing around $270,000 and most people wanting to put down the standard 20%, you would have to have $54,000 saved up for that down payment. And with most Americans having less than $1,000 in their bank account, it's no wonder that down payments is the biggest reason that most people don't buy a home. However, there are two main options you can take to kind of help with that down payment. One being a down payment assistance type program, which are grants or loans that can be worth thousands of dollars to help you come up with that down payment. Or the second option is taking a non-conventional type loan, for example, an FHA loan, which can allow you to put as little as 3.5% down, which I have a video that I'll link down below, which is my most popular FHA loan video. But what I really encourage people before checking out that video is to watch this video through, because when it comes to home buying, you want to make sure you fully understand all of your options. What may be the best option for you to buy a home may not necessarily fit into my financial position, so you really have to know all your different options to make the best decision on what route you want to take. And I'll also mention some non-traditional type ways to come up with a down payment that I'll mention towards the end of this video. But what is a down payment assistance program, or DPA for short? Well, it's exactly what it sounds like. It's a program designed to help people, and there's literally thousands of different programs out there that are meant to help people come up with a down payment, and they vary state by state, but in general they either range in the category of a grant or a loan. And with these down payment assistance loans, they can either be interest free, or sometimes they offer a lower interest than what you would find with a traditional mortgage, or more typically you'll find it be a higher interest than what you would find in a traditional type lending way. But at the end of the day, if this is the only way you can come up with the down payment to be able to afford a home and be able to move into your first home, then for me, I look at it as a win. It's definitely not necessarily the right idea to have a higher interest rate. You know, that's not necessarily a position anybody wants to be in, but these down payment assistance programs will help out with people to move into their first home. In general, down payment assistance programs fit into four main categories. The first being down payment assistance grants, which is money given to you that doesn't necessarily have to be paid back. Obviously, this is the most ideal situation, but most people fit into the second category, which is down payment assistance loans that have to be repaid. I'll talk about two other options that don't necessarily have to be repaid, but in general, people have basically a second mortgage. So let's say you buy a home that's $100,000 and you have a mortgage that you're going to have to make monthly payments on that $100,000, but you also need a $10,000 to come up with a down payment. They basically give you a second mortgage on that $10,000. So you're making monthly payments on that $10,000 as well as monthly payments on that $100,000. Now, the other major thing to consider is that when you take out this second mortgage to come up with the down payment, it's going to be factored into your debt to income ratio. So let's say, for example, I qualify to make $1,000 monthly payment on a typical mortgage, but I had to take out the second mortgage that I'm making $100 monthly payments on there, then that basically were to reduce the amount that I qualify for a typical mortgage by $100. I mean, really it would be more like $50, but in the end, I don't qualify for as large of a loan. So that's definitely something you're going to want to consider, is that if you're taking out a second mortgage to come out with that down payment, in general, the amount of house you're going to be able to afford is going to decrease. Now, the next category of a down payment assistance loan I want to talk about is a down payment assistance loan, so a second mortgage that has deferred payments, so they don't have to be paid right away. So for example, you can have a grace period of, let's say, a year, and you don't have to make any monthly payments on that second mortgage. You still have to make monthly payments on your main mortgage, but there are special circumstances too where you have deferred payments all the way until the end, until you actually sell your home, or you end up moving, or you end up paying off this mortgage altogether. So in a way, it's a down payment that you don't necessarily have to even worry about until you actually move. Now, the final category of a down payment assistance loan would be one that's forgivable after a certain time frame. So you're still making monthly payments, but it can be forgiven. This whole entire amount could be forgiven after 5 years or 10 years, depending on the actual program that you qualify for. Now, as far as who can qualify for these down payment assistance programs, in particular the loan programs, there's kind of three main categorized restrictions. The first being your income level. They don't necessarily want people that are making 6 to 7 income figure levels to qualify for these programs. These programs are designed for low income earners or sometimes middle type income earners that don't make enough to be able to come up with that down payment so they can get them in a home. That's what these programs are designed for. Now, the second main category restriction that happens on a lot of people is that you can't necessarily go out there and buy a multi-million-dollar home, right? These programs are designed to get people into a residence, which is also kind of fits into this category, right? You need to be buying a home that's meant for your primary residence. residence. It's not necessarily meant for down payment assistance programs, not meant for people to buy a vacation home or rental property or anything like that. So if that's what you kind of have in mind, that you're not necessarily going to want to go down this route. If you're looking to move into your first home and you're a low income earner, then down payment assistance programs is definitely for you. And the last type of restriction is what I'm going to call this miscellaneous type categories, which this can be because of geographical areas or as well as your profession and what your employment type of situation is. So for example, different states have different down payment assistance programs, but even within the same state, county by county can have different down payment assistance programs, as well as city by city, or even just the specific area you're looking into, as well as different professions. You know, there's programs out there. For example, I'm just going to reference Texas right now. Texas has down payment assistance programs specifically designed for people like firefighters or teachers or different things like that. So if you have a specific kind of profession you're in, you know, you're going to want to make sure that there's not a down payment assistance program specifically for your profession, because you may benefit greatly from that. Now, I should also mention too, in terms of credit score, the credit score you would need to qualify for a lot of these down payment assistance programs do vary, but in general, you're going to want a credit score of a 620 or above. Now, before getting into how to apply for some of these down payment assistance programs, I do just want to ask if you gained any value from this video at all, or if you appreciate real estate videos and the fact that I don't necessarily beg for subscribers 24/7 like other channels sometimes do, please consider subscribing to this channel. And if you don't necessarily want to subscribe, just to help me out, if you don't mind hitting that like button, I would greatly appreciate it. Now, when it comes to down payment assistance programs and how to apply for them, I will mention a couple of specific resources, but in general, the best starting point that I recommend for a lot of people out there is to just Google your state and down payment assistance programs. So let's say you're living in California, Google down payment assistance programs, or let's say you are living in a specific region, start to kind of narrow that search. So figure out what programs are offered in your state, then start to figure out what's offered in your specific area, then your specific city. You know, if you're living in LA, Google LA down payment assistance programs to see if there's specific ones that you may qualify for. And then even your profession, like I mentioned before, in a lot of cases, you may be qualified for a down payment assistance program that's specialized for teachers or firefighters or doctors. There's plenty of programs out there, and I can't mention them all, but here's a couple of good resources to at least start off with. The Genoa Fund is a nationally available down payment assistance program, with the exception of New York, that actually the mortgage agency behind it is actually federally chartered. So that's definitely going to be a good starting point. And then the next available program I'd probably look into is HUD Home Programs, which HUD is the Housing and Urban Development Program Department of the United States. So it's definitely a good resource as well, which I'll link couple of links down below in the description. So be sure to check out those. Another available resource is anybody that specializes in FHA or USDA or even VA loans, because for example, VA and USDA loans, they have loans available that you actually put down 0% down as a down payment towards your home. So that's certainly an option if you fit into those categories. Before we jump into the non-traditional ways to come up with a down payment, here's an interesting real estate fact for you, which is that individual real estate investors account for about 75% of the rental properties available out there. Now, the first non-traditional way to come up with that down payment is to have a family member or a good friend gift you that amount. And when it comes to that down payment, if they're gifting you something like $10,000, you're going to want to make sure you fully understand different options on how they could properly gift that to you, because in some ways they can give you $10,000 and it's going to be taxed, or they can give it in a different way and it's not necessarily going to be taxed as much, if at all. So you're really going to want to make sure you understand that. The second option that's kind of, you know, a lot of people don't necessarily like to take this route is to have a family member or friend loan you the down payment. And it can either be done formally or informally. Typically, a lot of people take the informal route, and later on it causes arguments and a little bit of tension between family members and friends. So you're going to want to make sure that, you know, that you're introducing finances into a friendship or a family element, whether or not that's worth it to you, especially if they're, you know, offering at a low interest. Now, another option that's going to become a lot more popular right now is to basically really reevaluate your living situation and consider selling some assets. So let's say you have a car that's worth $10,000 that you could sell right now. That's your down payment right there, which obviously if you live in a city and you're having to drive back and forth, that wouldn't have been an option. But a lot of people nowadays are working from home, so selling that car is certainly an option. So just kind of think of that as an option of just being able to sell a bunch of things right now that may be of a significant value that can help with that down payment. Now, the very last option to come up with that down payment that I recommend is just win the lottery. It's so simple. Okay, obviously I'm joking there. Jokes aside, one of the best things to do is to just be patient. So even at $25 a week, just saving $25, so a lot of people, that's just eating out one less time, that actually would end up being more about $1,300 per year. So in about 5 years, you're saving more than $6,000 in that 5 years. And that may not necessarily seem like a lot, but for an FHA loan where they only require about 3.5% as a down payment, you could actually qualify for a home that's worth about $180,000. So that's just something to kind of put into context, that even just saving $25 per week may not necessarily seem like a lot, but if you're patient enough, that could be the difference of you moving into a home that's worth about $200,000. So it definitely pays to be patient. And speaking of patience, if you've been patient and watched this video all the way through, I just want to say I greatly appreciate your time. And if you like personal finance, videos on real estate, or if you want to give input on future videos, I'm definitely open to suggestions. Feel free to comment down below. I love interacting with people in the comments. And as always, I hope to see you in the next one.